Hello, and welcome to another update video about Ethereum. Well, I think we see FOMO kick in left, right, and center. It did warn you that the third wave is the FOMO wave. So if this really is a third wave, which it currently looks like it is, it's gonna keep going with only shallow retracements. So what I will do, and I did talk about that in not only in yesterday's video, but for the last few weeks, that I'm going to update relevant support after every move so that we can have the levels that we know if as long as they hold, we can focus on higher. Below them, the whole structure may break down, or at least we get a much deeper pullback. So that's relevant because the current wave pattern, for example, is relevant and valid as long as we're holding the 1995 level. After Ethereum's move yesterday, I've updated support earlier today to highlight that. Okay, so we can focus on higher. I think eventually I wouldn't be surprised to reach the $3,000 range eventually here, but we'll see. We'll see how it keeps going. For now, we just take it level by level. And I did highlight to you that in third wave rally, if this really is the heart of a third wave rally, which I assume at the moment it is, then we are going to see a lot of movements like the one yesterday, and we're going to see only shallow pullbacks. And that's why it makes so much sense to just update support, not be too much, don't get into, don't try to count every little subwave structure. Well, I do that anyway, but just be aware that trying to cash out at the top of third waves and trying to buy back in the lower, when a fourth wave bottoms is extremely difficult because they may be very, very shallow. Okay, as you can see here yesterday, it was a very shallow fourth wave. So this is what typically is indicative of a third wave. And I can only warn you of following perma bears in this market. It's the same story that we had end of 2021, where a lot of people were still bullish and couldn't understand that we're going to go down. It's the same story now. It's the people who cannot understand with everything that's going on out there that prices can continue to go up. Yeah. It's the same people who will call out that they've been right when we've had the first move down, but they've missed on more than 100% around the market. Yeah. Anyway, I can just highlight to you, this is not the attitude anybody should have. You need to be very much aware that a bear market low isn't confirmed yet, which means we could still get new bear market lows, but we have to listen to the market. We have to listen to the price. The price is the only indicator we need, really, understanding market structure. We don't want to look at other stuff because it just confuses. We don't want to get into analysis paralysis. Yeah. I see so many Wyckoffs out there. I see so many, and it never works. Anybody I've seen using Wyckoff is usually wrong. It might be because they don't use Wyckoff correctly. It might be that Wyckoff doesn't work. And I often get questions, can you talk about Wyckoff? No, it's I don't know if it works. I'm not an expert in Wyckoff, but what I can tell you is that many people I've seen using Wyckoff just usually get it wrong. And that's why we use market structure, because it tells us very clearly the objective levels above or below which we change our view. And at the moment, the primary view is and has been for weeks that we go up and that we get into a third wave rally. And that's currently what is going on. A couple of weeks ago, we talked about that we might have the last possibility to get on the third wave rally train. This is currently happening. I did issue a small warning yesterday and highlighted it could be, but this was only the alternative count, something I said I purely watch, not something I focus on, that this could have been a leading diagonal here. Yeah, so that would indicate a breakdown in a wave 2. Let me take that one out here. But that this here could have topped somewhere here and then with a breakdown in a wave 2. Not happening, okay? It was only the alternative, something to watch, not something to focus on. Didn't happen. We remain to focus on the upside at the moment, as long as we're holding 1995. And I want to zoom out just to highlight the target for that third wave, looking at the bigger picture. And before we do that, it's already, just let me add the timestamp. Just as an info, if you are interested in getting these live charts, because that's what I update the timestamps for, you get access to the live charts as channel members if you're interested, because then you can integrate them into your TradingView. A lot of members like to do that. But what I wanted to do, measure the length of the wave 1. Wave 1 topped here somewhere. That was in February. We came down in the wave 2 and the third wave rally. So the minimum the minimum for a third wave rally would actually be 2,420. It's the 1.618 extension. Okay, so this will be the next decision point. But I wouldn't be surprised if we see an extension to $3,000, the 2.618 extension. With all these subwave structures we have here and all these 1-2 setups, it should push higher. Should, not will. So always be aware, at the moment the trend is clearly up. We focus on that. No reason to focus on new bear market lows until we get a signal. And we have to change our view quickly in the current market conditions. But for now, I mean, I have to assume, based on everything I see, that we really are in this third wave rally. Could it be something more bearish? Yes, of course. But looking at this, then, you know, looking really at the lower detail and the subwave structures, it would also suggest we continue to push higher, especially as we are bull flagging again. Yeah, and you can see this was a relevant breakout. I mean, it's gaining in momentum. We start to see volume kick in. Big time. Message to anybody who's looking for overbought levels, they are useless. Yeah, overbought is useless. So as you can see here, we were overbought, we kept going higher. Okay, so overbought is useless in crypto. Oversold is useful, in my opinion. Here as well. Yeah, anybody who cashed out big time here. Yeah, I mean, you could have hit the dip here, came close to oversold, but still it keeps going. So yeah, beware of that. But at some point there will be a pullback. Okay, at some point there will be a pullback. So we need to be very, very careful about all of these support areas, and that's why they are there. When they break, things can change. But for now, we just climb the stairs, entry points. And by the way, support areas in a fourth, here it doesn't mean the price has to get there. It's likely to get there. It doesn't have to get there. It's the level where price can go to, so you can use it to calculate your risk. Maybe set your stop loss if you like to, but that's ultimately your choice. But yeah, they can be used for trading. But yeah, that's where we are currently for Ethereum. I mean, in the third wave, we talked about it in the membership before. You know, yeah, there are methods you can use to still jump onto the train. For example, you can use moving average crosses and so on. But it's nothing I usually use. But I guess in the third wave, you typically don't get that deep pullbacks. Yeah, I have to say that. You typically don't get deep pullbacks. We had a similar situation here. We also had third wave rallies. You hardly get pullbacks, okay? So that's sort of the situation we're in. And I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.